Welcome to The Explainer. Today, we're digging into a really fascinating puzzle happening in the Indian market. We're talking about United Spirits. Now, they're an absolute giant in their industry. But right now, in early 2026, their amazing performance and their stock price are telling two totally different stories. So let's get into it.
Okay, so here's the heart of the mystery. You've got profits that are just soaring, up by a quarter, but the market seems, well, unimpressed. The stock is actually getting pushed down. So what is going on here? Is this a hidden gem that smart investors should be looking at, or is it a major red flag? That's exactly what we're going to figure out.
All right, to really get to the bottom of this, we first have to look at the powerful and frankly completely contradictory signals that United Spirits is sending out to the market right now.
Just look at this. It's a real head-scratcher. On one side, the fundamentals look rock solid. Net profit is up nearly 25%, and get this, the company is completely debt-free. Huge plus. But on the other side, the market is flashing all these warning signs. The stock's down over 7.5% in just the last month, and it's formed what traders call a death cross. Sounds dramatic, right? It's a technical signal that often gets short-term traders really worried.
So, with all those conflicting signals, how can there possibly be a bull case? Well, it all boils down to this really powerful strategic shift that has totally reshaped their entire business. So, United Spirits made a very deliberate choice. They decided that instead of just trying to sell more bottles, they were going to focus on selling better bottles. They pivoted to more expensive, higher-margin products. It's the classic quality over quantity play, and it's been a game changer for them.
And you know what? They're riding a massive wave here. The entire Indian liquor market's value is set to grow almost 3 times faster than its volume. And what that tells you is that consumers are trading up. They're moving from the mass market stuff to more premium brands.
So how well did this big bet pay off for them? Incredibly well. I mean, just look at this number. A staggering 90% of their sales now come from their high-margin, prestige and above segment. This is really the core of their entire profit machine.
And this chart just puts it all into perspective. Less than a decade ago, this premium stuff was just over half of their business. Today, it's pretty much the whole shebang. This massive shift has basically insulated them from all the brutal price wars that happen down in the mass market.
So what exactly is in this premium portfolio that's doing so well? Let's take a look at the actual brands and the smart bets that are fueling all this growth.
This right here is their growth engine. You've got these globally famous Scotch whiskeys like Johnny Walker. You've got trusted local names. And then you have these really cool, innovative new products like Godawan, which is an Indian single malt that's perfectly timed to capture that whole craft spirits trend.
And they're also being really smart about buying their way into new trends. They just snapped up NAO Spirits. That's the maker of the super popular craft gins Greater Than and Hapusa, which gives them instant access to younger consumers. And they've also invested in Sober, a zero-alcohol brand, which is a really clever long-term bet on that whole conscious consumption movement.
Now, when you put United Spirits side by side with its competition, its strengths just pop right out. I mean, its valuation, that P/E ratio, it's actually more reasonable than its competitors. But the real story, the thing that really stands out, is its return on equity. At 21%, its profitability is just in a whole other league.
So, return on equity, or ROE, basically tells you how good a company is at turning shareholder money into actual profit. And at 21%, United Spirits is just way more effective at this than its competitors. It's a textbook sign of a really well-run, efficient business. Okay, so the fundamental picture looks incredibly strong, right? But that still doesn't explain why the stock price is struggling. So now we've got to turn to the bear case, the serious risks and headwinds that the company is up against.
So the risks really fall into 2 big buckets. First, you've got this incredibly complex and unpredictable regulatory maze. I mean, every state in India can change its alcohol taxes and policies literally overnight. And second, there's this constant supply chain squeeze from the rising cost of things they absolutely need.
See, in India, every single state is its own market with its own set of rules. So in Maharashtra, a massive 50% tax hike is hurting sales. Over in Telangana, a new cess is driving up prices. It is a constant state-by-state battle against all this uncertainty.
So what are their biggest costs? Well, 2 things. Extra neutral alcohol, or ENA, that's the base spirit they make from grain, and glass for all their bottles. Grain prices have stayed stubbornly high, partly because the government wants it for ethanol production, and that puts constant nagging pressure on their profit margins.
All right, so we've seen the strong bull case, which is all built on this brilliant premium strategy. And we've seen the pretty serious bear case, which is driven by these short-term risks. So, what's the verdict for an investor looking at United Spirits in early 2026?
It's really a classic showdown, isn't it? You have these stellar long-term fundamentals clashing with very real short-term headwinds. The bull case points to a debt-free, super profitable market leader. The bear case is all about regulatory pressure, cost inflation, and that worrying chart pattern.
So what do the experts think? Well, despite all of those short-term worries, the consensus among 27 market analysts is actually a clear buy rating. In fact, their average 12-month price target for the stock suggests a potential 17% upside from where it is right now.
And if we look a little further out, there are some potentially huge catalysts that could totally reignite this stock. There is a possible UK-India trade deal that could slash the insane 150% tariff on Scotch. A brand new CEO with a fantastic track record is about to take over. And, let's not forget, they could unlock billions in value from their IPL cricket team, RCB.
So, the final takeaway here is a bit nuanced. If you're a short-term trader who's obsessed with charts, yeah, the risk is pretty high. But if you're a long-term investor who really believes in the company's fundamentals, this whole period of market weakness might be the exact opportunity you've been waiting for.
And that leaves us with one final thought. For a company that has bet everything on the idea of premium, maybe the most valuable premium of all for its investors is just a little bit of patience. Thanks for joining this explainer.